Hi, here we are, and we're going to look at Chapter 4, SE8 on page 229. We're going to use the same data from the problem from SE7 on page 229. However, in this particular problem, we're going to do a multi-step income statement. And if you recall from our discussions, a multi-step income statement is going to break the income and expenses and costs down into their individual categories. It gives a better presentation or allows for more analysis of the data by breaking the data down into the different categories and associating the expenses and costs right along with the income that they're related to. So it's a little bit more detailed, a little bit better for analytical purposes. For a business to be able to use a multi-step income statement. Okay, so here we go. First, we're going to have our net sales. And our sales are going to be $2,400. See if I can make this any bigger. And then our cost of goods sold is going to be $840. And the difference between our net sales and our cost of goods sold is going to be our gross profit or our gross margin. And this is our first analytical point right here. Many companies, in particular those types of companies that are analyzing the profitability of the items that they sell, will break things down into the gross profit margin to see how profitable they are just above and beyond the cost of the items that they sell. So the next category are our operating expenses, and here we'll put our first item, selling expenses. And for this company, it's $555. And then general expenses are $450. For total operating expenses of $1,005. Again, then we will calculate our income from operations, and that comes out at $555. To calculate or to figure out our income from operations, we're going to take our gross profit and we're going to subtract our operating expenses to get our income from operations. And here, with the gross margin, we want to know that our gross margin is going to be sufficient to cover our operating expenses and that we're actually profitable from operations. So meaning we generate enough profit from the items that we sell to be able to cover any other revenues or expenses. So then our other revenue and expense items are, in this particular case, we have some interest income. So perhaps we have some money in the bank, we're earning interest on it, and so we have income from that, and we have $90 worth. And then we have some interest expense here. And interest expense would be a negative. To our business. And so here we have an excess of other expenses over other revenues. So we're actually going to subtract this. This is going to be $120. But it's going to be subtracted because there are more expenses here than there are income. Okay, so when we calculate then our income before taxes, we're going to take that $120 away from our $550, and that will get us $435 of income before taxes. Now, here, if we had more interest income than we have expenses, then this number here would be a positive number. Because our interest expense was greater than our interest income, we have a negative number here, and so therefore that's going to subtract from our income from operations. And if it had been a positive number, we would have added that here. So our income before taxes is $435, and then we have our taxes of $105, and that gives us a net profit of $330. And so if you were to look back at SE7, we will get the exact same answer. We just go about it in a different way. We just go about it in a multi-step approach, categorizing our income and expenses into various different categories. Thank you.